So you have student loans and you're worried you may not be able to buy a house because of all that student loan debt. What are you going to do? Well, the first step is understand how it works. Hi, this is Todd Baker, Certified Mortgage Planner, and I'm going to explain in this video how student loans impact your credit history and your credit score. So the first thing to understand, student loans are what's called an installment debt. What that means is it's a closed-end loan. There's a certain term of the loan, and then there's a certain payment. And for loan purposes, we have to determine what that payment is, or what we need to use as a payment to count in your debt to income ratio. So that's the first impact that it has. If you have student loans that are deferred, generally speaking, for most loans, you have to count 1% of the balance as a payment. So for example, if you have a $10,000 student loan, $100 is the estimated payment in your debt ratio. There are certain loan types like VA where if they're deferred, you can still defer them for 12 months, but all the other loan types, pretty much you need a 1% payment in there. Now, that might be more than you're going to be required to pay, and 1% on $100,000 worth of student loans is going to be quite high as a monthly payment. And there are options. So when you go to repay your student loans, there's usually 4 basic options: an income-driven plan, a graduated payment plan, an extended plan, and a standard plan. Generally speaking, for loans, to use a payment plan on a student loan, to do a mortgage anyways, you need to be in either a standard or an extended plan. An income-based plan and a graduated plan, those both can fluctuate. The income fluctuates based on your income, right? So if you're low income, it's a really low payment. If you have more income, you have to pay a higher payment. And then if it's a graduated plan, you start with a low payment and it gradually gets higher. Neither of those are a fixed payment. So for residential mortgage loans, for any loan type, you can't use those. So one of the things I do when I pre-qualify somebody, I see student loans and they're in repayment, I will have you request a mortgage verification letter from your student loan servicer to determine which type you're on. Now, a little trick is if you need to lower your payment, you can go into an extended plan. So the standard plan is typically 15 years, an extended plan is usually 25, and at least you're paying your loan back at a lower payment. If you lower your payment into that 25, you can always pay more to pay it back sooner, but that would give you a better debt to income ratio. And just keep in mind, like I said, the income or the graduated are not going to work. You either have to switch it to a fixed payment plan, or your lender, like I would, have to use 1% of the outstanding balance as a payment. So that's how they work. Now, the culprit, though, and here's the big thing. For many of you that have student loans, you have to really actively manage your student loans. When they're in deferral, or if some of you have started paying and then put them back into deferral, and then you pay and then you put them back in and out, depending on your situation, that's totally cool to do, but don't pretend that they're in deferral when they're not. Or don't forget that when the deferral's up to start making your payments. What I see all the time, when I say all the time, it's a regular occurrence where folks have student loans and they go into deferral, the deferral ends up, and they forget for 3 or 4 months that they were supposed to make a payment. And the next thing, guess what then happens? Now you have late pays. The late pays on a student loan aren't a big thing because it's well understood in terms of a risk point of view, because it's understood that it's easy to overlook those in the the transition from deferral to payment repayment status. The bigger thing, though, is it tanks your score. So student loans will tank your score if you miss payments. Do not miss payments. So those are the big things. Make your payments on time, manage your deferrals well, and then make sure you're working with a highly trained professional that understands the options on student loans to get you the best debt to income ratio and the greatest purchasing power to buy a house. That's what I do. So connect with me for any questions, and I hope you have a wonderful day.